everyone. 8 p.m. Eastern, Wednesday. Can only mean one thing. We're talking about crypto assets, namely cryptocurrencies. Super excited. It is, of course, Taxes and Retirement Live. I am your host, Andy Panko. And since I am far from an expert on crypto, I found someone who is sharp and knows his stuff when it comes to it. Now, little off the beaten path in that this is not a typical taxes and or retirement topic, but I know it's of interest to a lot of folks, and there have been questions in the group. So I thought this would be something cool to have on. Just looking at a comment here, have on and to get someone who actually knows what they're talking about to do it. So without further ado, I would like to introduce you all to, drum roll, Zechariah Schaefer.
What's up? How y'all doing?
Good. How you doing? You pumped?
I am doing well. Andy, thanks for having me. It's a pleasure to be here.
Thanks for coming on. I'm looking forward to learning something because I really know not much about this crypto stuff.
Yeah, crypto is super fun. It's that thing that everyone wants to talk about and no one wants to make a statement about because almost no one actually knows what it is.
That's my thoughts. So Zechariah, quick background. Met him on LinkedIn. Just I don't even know how, but came across one another. We've chatted a few times. You were actually up here for a wedding recently. We almost met up when you were here. So you are the owner and founder of Ascent Personal Finance, based in Virginia, working primarily with millennials, shall we say, people in their 20s or so. So you're kind of fresh out of school. So you're working with your crowd of folks doing non-investment management, just fee-based, fee-only financial planning and guidance, right?
Yep. Yeah, you got it right. I started out of school, worked at a couple of firms. I loved it. And similar to you in seeing flaws with the traditional model, I saw that, people my age, people 10 to 15 years older than me were very underserved and had huge opportunities. Because, the decisions that you make in your 20s, 30s, you're going to spend the rest of your life either paying for them or benefiting from them.
Yeah.
And I was like, these people make good money. They need help. You can't pay a doctor client who has $300,000 in debt, $3,000 a year to work with you. So right. I just kind of got to thinking and I was like, how do we do it? This whole generation is all about subscriptions, subscription model. So I do subscription-based financial planning, fee only, advice only. And then it's centered around basically managing their income. And then obviously, helping them to invest well, save on taxes and a couple other things.
Cool. And crypto came up. You started dabbling yourself when you were in high school, you said, right? And then just logically, folks, not to stereotype, but folks of your generation, Gen Z, I guess it would be, very fascinated, more so than older folks, I guess, fascinated in crypto. So you kind of naturally developed a bit of a knowledge and expertise in it, right?
Yep. Yeah. I remember back in high school, early high school, I got fascinated by it. I discovered it on this site called Reddit, which is basically like a big internet message board. And I was like, Bitcoin, what is Bitcoin? This sounds kind of cool. Dove way deep into it. I remember vividly asking my mom if I could buy some, and it was like $200. And I was like, Mom, please, can I buy some? And it went down to $100. And she said no when I wanted to buy it $200. I was like, okay, thanks, Mom. You knew what to do. And now it's at like 60,000. So it's fine. I ended up more later. But yeah, I got fascinated in high school and then got really into it and really fascinated with the technology behind it later on in college. And now it's a lot of what I do, helping people with their crypto.
Cool. All right. So before we get into the meat and potatoes of it, I got this dad joke thing I think you know about. So what's the best way to watch a fishing tournament? Live stream, of course. You know what I'm saying?
Oh, I know what you're saying. I love it. I love dad jokes. That's good. That's good.
Wait, what's green? What's green, fuzzy, has 4 legs, and will kill you if it falls out of a tree?
A cinder block, but you lied about the other stuff.
A pool table. Why it's up in a tree? I don't know. It's like a bad Looney Tunes episode or something. And elevator jokes are the best. They just work on so many levels. That kid's my side. You don't mind.
Yeah. I love it. I got one. What do you call a fish with no eyes? A fish. Yep.
Obviously,
You got it.
yeah. I saw another joke like that, and it was play on stripping out the letter, but good one. I like it. Just for folks watching at home, so last week I started this thing where to help keep myself honest, I'm trying to shed some pounds. So I announced to the world that I was starting a weight loss, and I clocked in at 176.1 last Monday. This Monday I was 174.2. For those of you paying attention, so strong start. But to be fair, I was a little bloated going into the first weigh-in last week from a weekend of eating and drinking. So I think I had an artificially high starting figure, but whatever, I'll take it. All right, before we get going, this video is only general explanations and education. It is not specific tax, legal, or crypto investment advice. Before considering acting on anything you see in this video, first consult with your tax, legal, or investment advisor, which neither myself nor Zechariah are. We are just two blokes here tonight talking about cryptocurrency and assets. Ain't that right?
Yep.
All right, let me just check comments. Comments are working. Cool. Google is not a financial plan, Zechariah. You know Cody Garrett, right?
Oh, that's good. Yeah?
Yeah. Uh-huh. It's definitely not. Although I do self-diagnose myself medically with Google, which is probably a mistake. All right, so crypto. I don't even know where to start. Maybe, I'd ask you what is it, but let me try to just maybe narrow it down. I mean, cryptocurrency. How do you go to explain what a crypto asset or cryptocurrency is? And let me just preface it by this. So people know what a physical thing is. You used to own a share of stock. It was a piece of paper. It would reside in a vault in your house. Now, one step removed, but I think people still kind of get it. Stocks, vast majority of them are no longer in physical form. Right. You own it in electronic form. It still resides somewhere electronically. Technically, it's at a place called DTC, which is the pipes and plumbing of the financial system. So there's still a concept of you own something, that something resides somewhere, albeit it's all electronically. Crypto, I even struggled to wrap my head around because it's like one more step removed from being able to like see, touch, and feel and know where it's at.
Right.
So I don't know. In a very layman's term, what is a crypto asset? I guess specifically cryptocurrency.
So,
or if you have a better way to approach like the intro to this, feel free. I wasn't quite sure.
No. So the first thing about crypto is that we have to understand that at the core of crypto is this new technology called blockchain technology. And blockchain is a form of another technology called distributed ledger technology. Okay. And if you think about it, it's kind of like how in the old days, well, not too long ago, we had ledgers at banks, and every bank had a ledger. And if I sent money, from my bank to Andy's bank, then my bank's ledger would update it, and then Andy's bank's ledger would update it. But the thing is, I'm asking my bank to do that. I'm putting the trust in my bank, and so is Andy with his bank. With crypto being a distributed ledger, what it does is it's basically everyone in the network, and this is oversimplified, and some cryptos aren't like this. It's all nuanced, but for the sake of explanation, basically, if you think about it like a whole ton of people all in a ballroom. Now, it used to be that there had to be one person on the podium that told everyone what to write down. Everyone has a notepad. And so that one person, that central entity, gets up there on the podium and they say, hey, Zechariah sent money from his bank to Andy's bank, or Zechariah sent money from himself to Andy. Yep. And then everyone says, okay, headmaster, great, we all write that down. But with crypto or with blockchain, essentially it's like everyone is that person that's standing up on the podium and everyone is holding the notepad. And so everyone is running the same code and everyone has the same database. So it's a distributed ledger, but then also the recording mechanism for the ledger is also distributed. So if everyone is running the same code and everyone has the same data, the same ledger, then everyone can essentially vote and decide whether or not transactions are legitimate. So tell me if I'm not making sense.
Yeah. What's the benefit of that?
So the benefit is that blockchain technology allows for ledgers, for records to be distributed across the world, decentralized. Yep. The power isn't centralized in one place around one entity, and then immutable, which essentially means that once the network grows to enough people, once there's enough people in that ballroom that are holding their notepads that are all doing the same thing, a malicious actor can't just come in and say, hey, I want to change everything. And the big thing about that is that for the first time, arguably, in history, the power is in the people's hands, not in the big entities. So you can truly be your own bank with this technology. And that's blockchain 1.0, just like simply recording and editing entries in the ledger. But blockchain 2.0 gets to where you're actually running code on that decentralized network, which then gets into huge use cases way past cryptocurrency, which is just purely, the network saying, hey, I sent money from here to there. And that gets into running code on there, having legal contracts on there, having house deeds on there, having medical records on there, supply chain logistics being coordinated through there, identity management. But so crypto at the core, to get back to the start, is blockchain technology. And blockchain technology is basically that decentralized distributed ledger. And so Bitcoin is a blockchain. And Bitcoin is basically, it's basically just a blockchain. And it was the first one, which is why it's the biggest one. It had the first mover advantage.
Okay.
And Bitcoin, the network, is a whole bunch of people running the Bitcoin code that have the Bitcoin, the blockchain, the ledger, and they're all running the same code with the same ledger, and then it records it. And so, I don't actually own my Bitcoins. I own my private key. So if you think about the network like a city with addresses, my private key is kind of like my Roman stamp that I have inside my house. And so I can send letters out and sign them with my Roman stamp and say, hey, network, this is actually from me. And then everyone else on all their notepads, they look at it and they say, okay, this is actually from Zechariah. And then I send that to someone's public address, which is kind of like their mailbox. And that's their, that's the address that everyone thinks of when they think of a Bitcoin address.
So that's how you buy and sell or transact and trade, is through that ledgering, and you, in effect, using your private key to say, this was mine, I'm now giving it to XYZ.
So that is how you transfer crypto. That's how you transfer Bitcoin on the Bitcoin network. Basically, I would be in my house and I would take my Roman stamp, if you will, and stamp the letter and say, hey, this is actually from me. I'm the only one that has this stamp. And then I tell the network, hey, I'm sending it out. And I also say, hey, network, if you verify this transaction for me, I'm going to give you a little bit of my transaction as a reward, the transaction fee, because they actually have to do the work to verify it.
Okay.
And then, I know your mailbox, I know your address. And so I say, hey, network, I signed this with my private stamp. I'm giving you a little bit of crypto as a reward for verifying this transaction, and I'm sending it to Andy Panko's address. And then the network verifies it, and everyone looks through the notepad and makes sure I actually have the Bitcoins, and they send it over. And then they delete it from my address and add it to yours.
Got it. Now, very basic stuff, and this is legit questions I don't know the answer. How does one get into the network to be a player in this? Is this mining, or is this something different? Like if I want to be one of the ones with my notepad in this ballroom, how does that happen?
Yeah, so to mine crypto, it works a lot differently than if you just want to own crypto or send crypto other places. Because if you want to mine crypto nowadays, every different blockchain, every different coin has a different way of being mined. And there are also even different ways to mine coins, different protocols. But you could sign up for basically, it's called a mining pool, because the computing power that you now have with your individual computer isn't going to be enough to make a dent. So you would pool your computing power with a whole bunch of other people, and then you would be basically all pooling together to then be one of those voters, if that makes sense.
So mining, I thought mining was, is it the creation of coins, or it's the getting paid a coin for providing a service?
So mining is the method of verifying transactions on the chain.
Okay.
So mining is the method of basically solving super hard mathematical problems that the result of them, the solution, verifies those new transactions and gets them sent through. So when everyone solves the super hard math problems, and then verifies that, I did actually in fact own 10 Bitcoins and I did actually in fact send them to you. When that block is solved and when the miners solve the math problem, then they get a reward as a fee. And that reward, that's where the new coins come from.
So that reward is a form of a new coin.
Yeah.
Now, what's this super hard math problem involved? Why isn't it as simple as me somehow being able to see your transaction from person A to person B and saying, yes, I confirm that's accurate?
I don't know the real reason, but what I do know is that when Bitcoin was created, no one knows actually who created it, but also when it was created, I don't know if they had the foresight to think about the power usage that the Bitcoin network is using nowadays.
Okay.
And so the different mining protocols, like I was saying, like every coin has their own specific parameters and code and everything in their own, flavor of, if you will. But then also there are kind of overall protocols for how mining works. And so right now it's called proof of work. And that's the mining method where they solve super complex math problems that really don't have a purpose and are more or less a waste of electricity, which I don't like because it's not good for the planet. There's another mining protocol called proof of stake, which is essentially basically voting. And it uses a fraction of a fraction of a fraction of the power that proof of work uses, but it still achieves the same result. But it's harder to implement. So they're working towards implementing that, but it takes time.
So does the super hard math problem have anything to do with actually, fundamentally validating transaction, or it's just some random math problem that for whatever reason they throw you a math problem, says if you have enough computing power to actually solve this, then it will be deemed that you somehow validated the transaction was accurate and legit?
I don't actually know because I haven't gotten that deep into mining. I never was a miner myself.
Okay, got it.
Yeah.
So that was one question. Why does it require so much electricity? So I guess you just answered the difficulty, the depth of the math involved requires massive amounts of computing power, therefore energy to actually try to solve. Okay.
Yep.
Got it. All right. So now so in order to mine, and mining is you're one of the ones in the network helping to, what'd you say? Distributed ledger. I'm one of the parties involved in helping somehow validate these transactions by way of complex math problems. Cool. Now, isn't there a risk? So you said the benefit is decentralization. It's not in one party's hands, whatever. Can't you flip that around and make that a con or a drawback? What's there to prevent collusion? What's there to prevent hacking by a nefarious player? Not to say U.S. government and its dollar record keeping is by any means perfect or fail safe, but it just seems sort of dangerous to have it out in the open. What could be a positive could also be a terrible negative.
Yeah. So you're saying one, kind of what are the drawbacks to being decentralized and distributed, which there are drawbacks. Blockchain is not the solution to everything. As much as some blockchain maximalists is what they call them would love for you to believe, it's not the solution to everything. And then two, what are the kind of the security risks, right?
Yeah, right. I guess right. Okay. Fundamentally, yeah, distributing is one fundamental thing, and then separately security around it.
So the limitations is that to be decentralized and distributed means that you're going to sacrifice speed. So you gain the fact that no one entity has control over the network, which is huge because it puts the power back in the people. I am now my own bank. My bank can no longer say, hey, Zechariah, we noticed suspicious activity and we're shutting your account down for 3 months and you can't do anything about it. Because I am my own bank. Now, of course, that also puts a responsibility in my hands, which some people may not be ready for. But the biggest drawback there is speed. And the other drawback, what you were saying, what you were getting at, collusion or manipulation, the blockchain itself, if you think about those people in that room, if you only have 10 people in that room and I'm like, wow, it looks pretty nice, I think I want to manipulate that, I'm just going to get I'm just going to get like 10 more people and then gain a majority. And so as the network grows and as there's more and more and more and more people, that's when that risk doesn't go away completely, but it gets minimized. And what you're talking about is it's called a 51% attack. So basically the only way to gain control and to write a malicious transaction on the blockchain and get it verified is if you gain control of over 51% of the network, which with a blockchain network as big as Bitcoin, it's arguably impossible to do because there's so many computers around the world that are doing it. But with some of the smaller blockchains, with some of the smaller networks, that does happen. There's a 51% attack, and hackers come in and they maliciously say, you know, hey, Zechariah has 50,000 coins, but he doesn't actually. But because they gain control of the network, because the network was small enough to manipulate it, they could do that.
Got it. So that's a risk. In theory, if there's just a network that's currently only run by one person, one computer or whatever, that person completely controls what happens.
I mean, that's just a centralized network. So that's like
right. Yeah, I mean, at that point, right,
running a server.
Yeah.
Like Visa, in a way, is centralized. Google is centralized. They're distributed, but they're not decentralized because they have a bunch of data centers across the world, but they all have, you know, they're controlled by the same entity.
Common control. Yeah.
Exactly.
Okay.
Yeah. And the other thing, security risks. So there's the security risk surrounding 51% attacks. But then also, you know, I think that a lot of people get scared of investing in crypto or owning Bitcoin because they hear that, you know, Bitcoin was hacked or the Bitcoin was hacked, which the Bitcoin blockchain itself has never been hacked. But what do you do when you can't storm the castle? You look for entry and exit points. And that is where people usually hear about a hack and they think that it was actually Bitcoin, but really it was a Bitcoin exchange.
Got it.
Yeah. And so the way that you go, you know, you buy and sell Bitcoin is going to a precious metals exchange. You know, you go exchange your cash for gold. With a Bitcoin or crypto exchange, you log into your Coinbase account and you exchange your cash for crypto. But the thing is, people hear about these crypto, you know, hacks, and what usually happens is that they didn't have their account set up properly, or the crypto exchange itself didn't have good security protocols. And so a hacker was able to gain control and then steal. Remember back to that Roman stamp, they were able to steal the Roman stamp.
Okay.
Yeah.
So maybe let's back that up. So we have an understanding of what blockchain is. We started talking about, I guess, let's just call it Bitcoin because that's the one everyone knows about. And we may have indirectly been referencing Bitcoin in terms of mining and stuff like that. We won't yet say what to actually do with it, how you spend it, whatever. But if someone wants to buy, let's just stick with Bitcoin. And there's multiple currencies out there. There's Bitcoin, Ethereum, Dogecoin, and probably a whole host of ones I've never heard of.
Oh, yeah.
But we'll just run with Bitcoin. How does someone buy it? You know, when you go to buy physical gold, you go to some seedy jewelry store and
Oh, did we lose him? I think that we lost him. Well, the show must go on. So he was talking about how do we buy Bitcoin, and the way. Andy, are you back?
I am back. I don't know if you can see me yet.
Yeah. Were you here the whole time?
No, I hit something on my keyboard by mistake, and I think I hit like the back button on the browser, which closed me out of out of my streaming service. Sorry about that.
Nope, no problem.
All right, so we're here. So yeah, so question was, where do you actually go to buy? People understand buying something physical. You go to a store. To a lesser extent, they understand electronic things like stocks. You go to an electronic broker like TD, Schwab, Fidelity, whatever. I want to buy Bitcoin. Where do you even start?
Yeah. So basically, the way that you start is, and you want to have security in mind the whole way. But the way that you start is you would go to one of those crypto exchanges that I mentioned before. So
now, can you just rattle off the top few and sort of super high level? Why would you or should you use one versus the other, or what are the things you consider in looking at them?
Yeah. So the top few in the U.S. and like this isn't me endorsing this, is just listing them. Coinbase and Gemini, or Gemini, whichever way you want to pronounce it, I would say are the top two in the U.S. And for people that want to just buy, you know, Bitcoin or Ethereum, I would say definitely buy it on a U.S.-based exchange if you're a U.S. citizen. And the reason for that is that U.S.-based exchanges are held to a significantly higher standard when it comes to legal, security, et cetera. And you want to have them have that because in the same way that when you log into your bank account, you're trusting your bank with your money. When you log into your crypto exchange account, you're trusting your crypto exchange with your money. So you don't want to log into some crypto exchange that's, you know, rooted in some country that doesn't have really strong legal problems or legal strong
protections.
Yeah, protections. So you want to have a US based exchange,
Okay.
and then past that, you want to have a really, really strong password, as well as have two-factor authentication set up. And basically, two-factor authentication is, I think most people here probably know what it is, but it's like if you get your password right, then it's a code that's sent to your phone so that they know that it's actually you and not someone else who just knows your password.
Okay. Yep.
Yeah, and so once you create your US-based exchange account, once you set up your complex password, once you set up your two-factor authentication, then that's when you would go into the actual exchange, you'd link your bank account, you'd transfer your money in,
Okay.
and then you would say, hey, I want to buy $10,000 of Ethereum. And then you just hit buy. And it really, at that point, isn't that much different than logging into your Schwab account and saying, I want to buy 10 shares of Nike, because it's pretty much the same interface.
So I now have an account at Coinbase or wherever that says I now own $10,000 worth, which is going to be a fraction of a coin in the case of Bitcoin, because it's like $60,000. You said, right? And can you buy in specific dollar amounts, or is there like minimum denominations for the stuff?
Yeah, so I mean, depending on the exchange, some of them have minimum transaction sizes or minimum trade sizes. But at an exchange that's so beginner friendly like Coinbase, as far as I know, you can buy as little as $1.
Okay.
And the way that that works is that I think many people, they hear that Bitcoin is like $50,000 and they're like, wow, that's expensive. But the thing is, Bitcoin is divisible. I believe it's 1 followed by like 26 zeros and then a decimal point.
Okay.
So Bitcoin is very divisible. And you can buy, you don't have to buy a whole coin. You can buy $10 worth, you can buy $100 worth, or you can buy 1 Bitcoin or more.
Okay. So I guess in that sense, it's sort of like mutual funds. Mutual funds, you can buy fractional shares if you don't have enough money to buy a full fund worth. You just get 0.0 whatever of a fund or something, right?
Yep.
Okay. And now what's like fees involved? So let's assume I actually have 60. Let's assume Bitcoin's trading at $60,000. I have $60,000. I want to buy 1 coin. Are there trade commissions? Are there like big bid-ask spreads where for that $60,000 coin, I'm going to have to buy it at $62,000. If I turn around and sell it, I'll only get $58,000 for it? Or like, how do these places make money?
So with the bigger coins on the bigger exchanges, there usually aren't big bid-ask spreads at all.
Okay.
They're comparable to a heavily traded stock because there's so much volume.
Okay.
If you're trading something like Bitcoin. Now, if you're going to a more obscure exchange and you're trying to buy or sell a very obscure coin that doesn't have much volume, that's in the same way with stocks. That's when you're going to see a big bid-ask spread. But with Bitcoin, it's not going to be a huge bid-ask spread. And the thing there is that the fees are not small. When you go to a place like Coinbase, you're paying for the convenience. And I believe I don't know the exact fees because they change based on how much you're buying.
Okay.
But if you're just investing a couple $100, you're looking at probably like 1% plus a flat fee, I think, of like $1 or $2.
Oh, so that can add up, especially if you're doing small trades. Okay.
Yeah, it definitely adds up. Now, if you trade on something like Coinbase Pro, which is basically Coinbase, but it looks a little bit more advanced, then the fees are lower on there. And then if you actually enter in your limit sell or limit buy orders, then the fees are almost non-existent. But most people don't know that. And so they just go onto Coinbase.com and just, buy their, market buy of $10,000.
Yep.
But if they had taken the time to transfer their cash into Coinbase Pro, they would have saved, $100.
It's a difference. Yeah.
Yeah.
Now you mentioned the private key. So do you get the key issued to you from Coinbase, and do you get a different key for each exchange account you have, or how's that work?
You are asking the right questions. So the way that Coinbase and crypto exchanges work is that they pretty much hold that key for you, which goes back to the first thing, which was the whole point of crypto, which is to bring the power back to the people. And that, when you're having all your crypto on a Coinbase or crypto exchange account, that pretty much defeats that purpose because you're no longer trusting the bank. You're just trusting the exchange. They hold your Roman stamp. Now, if you want to transfer it out, there are methods to do that range from literally printing out your Roman stamp, your key, which is just like I think it's like 64 character alphanumeric phrase, and it's just a whole bunch of random, capital letters, numbers, whatever.
Yeah.
It can be as simple as literally printing out on a piece of paper, which you better not lose that piece of paper if you have a significant amount of crypto. Or it can be as complex as having physical wallets that are essentially hard drives where you hold your crypto. And so for me, I actually have several of those. And the way that this thing works right here is that essentially my Roman stamp, my private keys are inside here. And when I turn this on, I type in my passcode into this, and then the letter or the transaction, if you will, flows into here. It gets signed by the stamp, and then it flows back out. The stamp never leaves, which presents, a higher level of security. Now, most people aren't going to do that. For most people, storing their crypto, unless you have a really big amount of crypto, probably should just store it on an exchange. But if you're worried about
you get one key per exchange, is that how it works?
No, so essentially the exchange just holds it in their wallet, but they earmark it for you. It depends on each exchange, but most of them.
So how many keys you have? I'm still not quite grasping. You have one 64-digit key for all crypto holdings, or you just get one key for all Bitcoin holdings?
So the way that it works is like you have a crypto wallet, and so I could make as many wallets as I want. And I could have as many public addresses as I want. And then I would have a private key for each of those. But the thing is, it doesn't really make sense for me to have more than one or two.
Got it. Each wallet has a key.
Yeah. So like I have, let's say my A level Bitcoin wallet where I store all my stuff, and there's a key for that.
Yeah.
And then I have my B level Bitcoin wallet where I transfer stuff from my savings into my checking, if you will, and I send that places sometimes.
Okay.
And then I have my Ethereum key, or I have my Ripple key, or whatever it is.
Got it. So that begs the question, if you lose your private key, you lose your holdings.
Yep. And that goes back to one of those drawbacks of being in a decentralized distributed system. So, if you lose your bank password, you just call the bank and you say, hey, I lost my password, help me out. But if you lose your private key, then you're toast. Now, there is one way to get it back, which is the seed phrase. And this is like getting into cryptography. And this is getting into the place where I don't understand how it works. But what I do know is that each private key is essentially generated from a seed phrase, which is like, depending on the blockchain and other things, basically like a random string of words. Mm-hmm. And so if you have your seed phrase memorized, then you can type that into a special computer program and it'll remake your key. But if you don't have your seed phrase, and if you lose your key, it's gone. There's no way to get it back.
Yeah. I don't know where. So Dave Fultz is probably the top contributor to the group here. Super sharp cat. 25% of all crypto keys have been lost. Can you confirm or deny that? Or is that, reasonable number?
Like, I have no idea, but yeah, that wouldn't surprise me. I mean, you hear about people who didn't even know what Bitcoin was in 2011, but their buddy said, buy some. And so like, yeah, sure, I'll put $100 in. And they ended up, buying several hundred Bitcoins, which is now a somewhat significant portion of all Bitcoins in the circulating supply. I mean, it's not a huge amount, but it's enough to make a tiny dent. So yeah, that wouldn't surprise me if 25% are lost.
Do you know how many Bitcoins are actually out there, and what's the cap? Because there's a limit on how many Bitcoins are able to be created, right?
Yeah. So the way, if we go back to that first ballroom example, everyone's holding the same notepad, everyone's running the same code. The way that the Bitcoin code was written is that there can only ever be 21 million Bitcoins. So right now, when those people in the ballroom verify a transaction, they earn a reward. And basically the code just says, hey, new Bitcoins were created and you got them because you solved the transaction. But when the supply reaches 21 million, then eventually the fees that people pay will just be the miner's reward instead of new coins being minted. So right now, there's what? There have been 630,000 Bitcoins traded in the last 24 hours. And then an estimate of the circulating supply is about 18.8 million. So
out of 21 total.
Out of 21 million. Yeah.
Okay. But like you said, they're divisible by 1 divided by 26.
I think, let me do that real quick. Yeah, a Satoshi, which the guy that created Bitcoin went by, or the guy or entity or group of people, whatever, that created Bitcoin went by Satoshi Nakamoto. And the smallest unit of Bitcoin currency is a Satoshi. And so it's 100 millionth of a single Bitcoin, which is 1, 2, 3, 4, 5, 6, 7. So 7 zeros and then a 1. Yeah.
Got it. Okay, so it's a lot, but it still hit its peak nonetheless at some point, or hit its cap at some point.
And there are other cryptos where their code is inflationary, and so new Ethereum just keeps on getting minted, or new Dogecoin. Dogecoin is extremely inflationary; it just keeps on getting minted.
There's no cap on that, for example, that you know of.
As far as I know, no. With Ethereum, if I remember correctly, they will have a cap eventually, but for now, it's like slightly inflationary.
Okay,
which is not a bad thing.
And sort of related question about different currencies. So Bitcoin, we talked about 21 million coins max, but they're 100 millionth of a coin divisible. Do all cryptocurrencies involve mining? So Ethereum, Dogecoin, whatever. How are those coins made, if you will?
So no, and this is again one of those things where there are so many coins out there that run in so many different ways. But no, not all coins involve mining. So some of them, they were all just created. And then if you signed up, at a certain point during the development process, then when the network started, you essentially, already had a house and a Roman stamp that was assigned a certain percentage of the network. And so some of them, they started out where they were just distributed through a sign-up process or through kind of getting dropped to people who already use the network. But yeah, no, not all of them involve mining and getting minted.
Okay. It's 8:40 already. We got a lot of questions here about like intrinsic value or lack thereof, which I definitely want to get to. Before we do that, using crypto. So disregarding for now the market mechanics that make it go up, go down, or whatever. Right. You own Bitcoin. You're not holding it purely for speculative investment reasons. You actually want to use it to transact, to buy stuff. How do you do that? Like, first of all, how many places take Bitcoin? I think we all sort of have loosely heard stories that it's not widely accepted, but you find a place that does use Bitcoin. How do you actually pay with the Bitcoin you own?
Yeah, so that is extremely impractical to do right now. And there are very few places that accept Bitcoin. And the other reason why it's impractical is the tax treatment of it. So if I go to, there are kind of car dealerships there, I feel like semi commonplace that accept it now. And it was a thing that happened during the big boom of 2017, and I think it's happening a little bit now, where car dealerships accept it. So let's say I go to a car dealership and I want to buy a $30,000 Nissan Leaf. When I pay for that Nissan Leaf in Bitcoin, that $30,000, that's a taxable event. And so it really makes it extremely impractical to use Bitcoin as a currency. Let's say even if it was accepted in many places until the regulations change, it just doesn't make sense in many ways. Because every single time that I swiped my card or bought something, I have to pay capital gains tax, or I have to record the capital loss because it's taxable event.
And is that because so let's assume you originally funded your Bitcoin account with $1,000.
Mm-hmm.
It grew in value to $30,000.
Yep.
So you have $29,000 because Bitcoin's not a currency, right? It's called cryptocurrency, but it's basically any other asset.
It's treated tax treatment just like any other asset, pretty
right.
much. Yep.
So you have a $29,000 unrealized gain. So you're saying when you go to buy a Nissan Leaf and we'll get to how you actually do this, but you somehow give them your 30,000 Bitcoin.
Yep.
Is that in effect you're selling your $39,000 to liquidate it to cash?
In the eyes of the IRS, I am selling my Bitcoin at that moment, triggering a $29,000 realized gain, and then getting the Nissan return. So really, that $30,000 transaction also cost me whatever, let's say 15% of $29,000
tax, right?
Yeah.
And for tax purposes, it's the same short-term, long-term, right? If you held it less than a year, it's taxes, ordinary income. If you hold it more than 12 months, it's long-term.
Yep, exactly. Okay. But the other thing that most people don't realize, which a lot of people have gotten in trouble for this, is that there is no like-kind exchange for crypto. So if I have $30,000 of Ethereum that I bought back in 2017 when it was $100, and Yeah, let's say my cost basis was $1,000 again. I have $30,000 of it,
Yeah.
and I say I think that Bitcoin is more promising. I'm going to switch my Ethereum to Bitcoin. That's also a taxable event,
So
which
it's
no
as if you
realize.
sold one and bought the other.
Yep. So
Yeah.
crypto to crypto transactions are taxable. Crypto to cash transactions are taxable. But many
Okay.
people are only aware that crypto to cash transactions are taxable. And so they owe back taxes and they don't even know it, or they've been reporting their taxes incorrectly and they don't even know it, which is really
Now,
bad.
yeah, that's not good. So you have 30,000 Bitcoin in your Coinbase account. How do you actually get that to the Nissan dealer?
Yeah. So the way that that works is it isn't. So let's say it's in my Coinbase account.
Yeah.
If it's in my Coinbase account, then I log into my Coinbase account and I ask the Nissan dealership for their public Bitcoin address. So
Okay.
basically, just like their mailbox back in that analogy a while ago. And so then I say, hey, I'm going to send $30,000 worth of Bitcoin to the Nissan dealership's mailbox. And then it gets broadcasted out to the network. And after the network verifies the transaction and the Nissan dealership receives it, then I'm good to go. Now,
Okay.
the other way that that could work is if I have my key and I actually truly own my Bitcoins, I don't have them held somewhere in an account that's tied to my name, then the way that that would work is similar process. I would use a software that basically connects me to the blockchain. And I would say, hey, I want to create a transaction where I send $30,000 worth of my Bitcoin to the Nissan dealership. And then same process, I would ask them for their public address, their mailbox, and then I would create the transaction. Then I would send it into here, type in my passcode, sign it with my Roman stamp, which never leaves here for security purposes,
Yep.
and then it would go back out, and then I would say send to the network, and then it would get broadcast to the network. Same process before. Network verifies it, and the Nissan dealership receives it.
Now, how long does that take? You said one of the drawbacks of this decentralization is speed and processing. So is every transaction getting quote unquote mined for people to verify, or they're already like verified verifiers who can instantaneously verify this and you're done?
So um, every transaction does need to get verified. Yeah. And the time that it takes to verify it, just like when you have a limited number of workers, the time that it takes to get your drink at a Starbucks is dependent on how many people are in line and how many people are ordering drinks. And so when the network's not busy and when there's not a ton of trading or there's not really, any big crypto events going on, then it's pretty fast. With the Ethereum network, it could be as fast as less than a minute, or with some other coins, it could be as fast as seemingly instant. Now, if the network's really busy, it could take hours and hours.
Okay.
Yeah.
So it's possible your Nissan transaction could be hours or maybe longer.
Which is another reason why it's impractical as of now to use crypto as a true currency. Now, the thing is, like, if crypto is the only alternative, if I live in Venezuela and the government's taking control of my money and devalued it to, nothing, then at that point it does make sense because I don't have an alternative.
Yeah.
But if I live in a country where there's a currency that's reliable, then it doesn't really make sense for me to use Bitcoin as a true currency.
Yeah.
Yet.
And quick question on tax, and this is something I probably know, but do the exchanges report to the IRS transactions and sales?
Yeah, so that's another thing. Depending on the size of your account, and I believe all accounts get reported now, but for a while, depending on the size of your account, they reported, and they also, gave you your 1099B or whatever.
Yeah.
But the thing is, I believe now all the transactions are reported, but if you have an account under a certain size, and I could be wrong on this, I don't, know the details of it. But if you have an account under a certain size, then I believe it's just your responsibility.
Okay.
Yeah.
Okay. Got it. So that's all I had in mind for like the basics of what is it, how do you get it. We'll talk about the market mechanics or lack thereof, valuation. Anything else you feel is important for people to know for a primer about crypto? Again, with the focus on cryptocurrency.
Yeah. I don't think there are any huge things. I think that the thing, which I probably am preaching to the choir here, but the thing that I always say to people when they want to invest in crypto, when they want to buy Bitcoin, is I ask them why. I ask them if they truly understand what it is, if they understand blockchain technology, and then I tell them to make sure that all of their other aspects of their personal finances are aligned, are healthy, are doing well. And then if they have margin, if they're doing well, then yeah, why not? take a risk, go for it.
Yeah.
As long as everything else is going fine, as long as you've done your research, as long as you're only investing what you can afford to lose. But if people are trying to make up for a retirement shortfall by investing a significant amount of their money in an extremely high risk asset that, some argue isn't even an asset, then that's where I'm like, y'all probably shouldn't do that.
Yeah, right. Fair.
And the only other thing that I would say is that I believe right now, blockchain, not crypto, is poised just like the internet was in the 90s. Blockchain, which y'all should go do some research on it after we get off of this, but blockchain has huge, huge use case potentials that are far, far, far past Bitcoin, past being a simple currency. And most of the pure internet plays from the 90s, remember pets.com, are gone. Now, very, very few, the unicorns like Amazon, they survived, but after a steep fall and then, a grind coming back up. But most of them were gone. And so I think that's the way it is with a lot of crypto projects right now. There are some really, really cool projects, but people are still figuring out how blockchain is going to get used. People don't know yet. And there are so many things we got to overcome before that. So looking for companies that have a strong competitive advantage, that have strong leadership, that have strong fundamentals, and are also using blockchain to bolster that competitive advantage, those are the things that I'd be looking for if I wanted to invest in blockchain in a way that's a little less risky than buying Bitcoin.
Straight up currency, cryptocurrency, yeah. Related question, are there any crypto ETFs or other indirect plays?
So crypto? Indirect plays, that's like the main way to invest in blockchain right now. One company, which, not an endorsement, but like JP Morgan is doing some really, really cool stuff with crypto. And their project, Quorum, is basically a copy of the Ethereum blockchain, but they've altered it for their own. And my research, this is old, it's outdated. This could be different now. But basically, they're working to transform the way that banks communicate so that it's on the blockchain. And they're not transacting value yet, but they are using their blockchain to send information across the world, which I think is super cool.
Okay.
But crypto ETFs, there are a couple out there. I don't know a ton about them. What I do know is that their fees are kind of high, and there are, they're pretty standard, just companies that are involved with blockchain. So I haven't looked into them in depth.
Do you know, and don't mention specific names so as to avoid anyone misconstruing this as investment advice, but are there ETFs where what you own is just a pool of something that actually owns cryptocurrencies, or these are just indirect plays like you own an exchange that all of its revenue is from crypto type thing?
So as far as I know, there aren't any true crypto ETFs yet, like a Bitcoin ETF that is truly pegged to the price of Bitcoin. There are one or two, I guess they're kind of companies, they're trusts, whatever they are, where essentially they're a company or a trust that's set up that owns a ton of crypto, then you can buy a share of it and be exposed to it. But the thing is, with how easy it is to buy Bitcoin nowadays, even to buy Bitcoin in an IRA, which that used to be like the main benefit of buying one of those, because then you could have it in your IRA and be exposed to it.
Yeah.
But those they have such high fees, and they are not directly tied to Bitcoin. So you have Bitcoin and the Bitcoin price, which obviously is determined by supply and demand, but then you have this shell around it that is the Bitcoin trust, we'll call it, and there's also a layer of supply and demand surrounding that. And so theoretically, you could have the Bitcoin trust price going up as Bitcoin is going down, and it's a whole mess. Which just buy Bitcoin on Coinbase.
Yeah, right. So speaking of supply and demand, David Fultz again, isn't crypto an example of the greater fool theory? Because if there is no intrinsic value, which I don't think there is personally, it's just pure speculation about what the price is.
So that is an excellent point, David. You are on the ball tonight.
Every night.
Every night, yeah. In some ways, crypto, especially during booms and busts, is very much the greater fool theory. People are buying something and they know that the project has no substance, but they know that there's another guy they think that's going to buy it, and they're just going to sell it to the next sucker. But I do believe that Bitcoin has intrinsic value. I do believe that Ethereum has intrinsic value. This is not an endorsement of it for your own investment purposes, but the intrinsic value that personally I believe it comes from is the fact that it's a decentralized distributed network where you can send value back and forth anywhere in the world for free or for a fee, and no one person, no entity can tell you to not do that. Now, the problem that we run into is that how do you quantify that?
Right.
And no one really knows. So, with stocks, we have profit, revenue, PE ratio, other things that are well recognized measures of a company's value and how well it's doing. But with crypto, how do we measure it? There isn't a value, or there isn't a metric yet that's widely recognized. And so, is it the number of transactions in the network? Is it the number of active users? Is it how many new accounts there are? Is it the volume that's getting traded or sent across the network?
Yeah.
No one knows. And therefore, I believe that there is intrinsic value, but I have no idea what it is. And I don't think anyone truly does.
Exactly. So there is some value, but whether that value is $100 per coin or 60,000 per coin, kind of impossible to say, right?
Or 10 cents per coin.
Yeah,
or,
right.
$1 million. I have no idea.
Yeah.
But I do believe there's value.
Cody Garrett, any idea how crypto is inherited?
Yes. So that is a whole other thing. The taxation on crypto is a bit of a nightmare, and the estate planning on crypto is a bit of a nightmare. And the reason is that there just isn't framework for it yet. So you have to work with a specialist who knows how to put it in a will. And also, if I lose this, or if I die and no one knows what to do with this, then this is going to become another one of those private keys that was lost. So you have to have in your will or in your estate or whatever the proper procedures on how to recover your crypto. Then you have to give that to a trusted person, or else it'll just get lost.
Yeah. How much do you think a record high stock market and the crypto craze are interconnected? So do you happen to know the correlation between the two, or are they really pretty uncorrelated?
I do believe that there is correlation. I have no idea about causation though.
Okay.
As cool as that would be, I have no idea. I have noticed though how, when there are stock market highs, it does seem like crypto is going up too, but I have no idea.
General buying craze.
Yeah.
Just looking, scrolling through their comments here. Yeah. So Canon, why the limit of 21 million? We don't know, right? Just was set up that way for
that was just the way that the entity or individual Satoshi wrote the code. And then for other cryptocurrencies, it is not the same. So it all depends on how that cryptocurrency's code was written and whether or not the crypto has a fixed supply or not. So there are some cryptos that have unlimited supply. There are some that have a supply of one coin. It all depends.
Okay. This person, sorry, late for joining. What are your thoughts about countries like El Salvador using Bitcoin as legal tender? Today, a Bitcoin ATM was burned during a protest.
I didn't hear about the Bitcoin ATM that was burned, but just because the ATM was burned, like it's not going to shut down the network.
Yeah.
But the other thing is that I think that it's interesting. I think it'll be really cool to see how it goes. But just because El Salvador started recognizing it as legal tender doesn't mean that all the barriers to adoption have been overcome. So Bitcoin is still slow. It's still expensive. It's still clunky to use. And yeah, that's great that it's legal tender in El Salvador now, but there are still so many barriers to widespread adoption that we're going to have to overcome before it's, actually practical to use as a currency.
Are there other countries, to your knowledge, that have accepted as legal tender? And second part, have other countries flat out banned it? Like I think Turkey said you can't transact in Bitcoin.
Yeah, I don't know exactly. Turkey has banned it. I think China bans it like every 6 months. It's really funny. And I think like even some municipalities in the United States have chosen to allow people to pay their taxes in crypto.
Okay.
I don't know specifically what other countries have, recognized it. I think El Salvador was the first one to recognize it as legal tender, though, as a country as a whole.
Right. You may not know, but what are the tax implications if you lose a key, whether yourself or the custodian? Is it like a worthless security? Like whatever your Bitcoin was, it's all now effectively zero because it's gone?
It's effectively in a cage that you can look at and never touch again. So if I lose this key and all my other backups of it, and I lose my seed phrase, which is like that phrase that we talked about before, where you can use the computer program to generate the key again. If I lose all of those, then I can go and I can look at the blockchain and I can see my wallet and I can see my coins and I will never be able to touch them. So it's like I can look at my house and I can look at the mailbox I can't get inside though. I can't get to that Roman stamp. And if the custodian loses it, this is a good question. If the custodian loses it, and we were smart about the custodian that we used, and it was a US based custodian that had good security protocols, that also had insurance, then odds are it's probable that you'll get your crypto back, or a comparable value of it. But if it's some random crypto exchange in some country that has very weak legal protections, it's gone. Like I had a significant amount of crypto on an exchange that was one of the only exchanges that this one coin called Rayblocks, which we rebranded as Nano, many years ago. I'm not endorsing it, but just many years ago, I had it there, and I transferred it out. And like the week after I transferred it out, that exchange got hacked, shut down, everything, and I would have lost like tens of thousands of dollars. But thankfully, I transferred it out.
Wow.
Yeah, it was scary. I got lucky. I got it by chance.
So if you lose your key, not because custodian lost it, you might know the answer, but it sounds like it's just as if you have a security that you never sell from a tax perspective.
Mm-hmm.
It's just always there.
Yep.
It's a big unrealized gain that you're never going to touch. So it's not, lost or worthless.
Like, I don't think that there's a precedent set yet by the IRS, but it's also very hard to prove that you lost your key,
Yeah. Right.
Like if I wanted to commit tax evasion, it'd be pretty easy for me to say, oh, I lost my keys.
Yeah.
But how do I prove that,
Right.
So I don't think it'd be really possible to get a write-off for that, unfortunately.
Canon again, can you buy crypto in an IRA or 401k, similar to Peter Thiel, who put like $7 into a Roth IRA? It's now worth billions of dollars.
Yeah, good for him. You can buy crypto in an IRA and some 401ks. Again, the 401k, it's very specific to which 401k it is. In an IRA, though, there are solutions to buy crypto. Aside from earlier, that Bitcoin trust or whatever,
yep.
Which is just a publicly traded security, there are ways to actually truly buy it in your IRA. And for the most part right now, they have high fees, like north of 1% a year or even more, and then buy and sell and transfer fees. But if you really believe in crypto and you think that it has huge potential, then maybe those fees are something you're willing to pay for the tax benefit, or for the potential tax benefit if it goes
right.
up.
Okay. And 401k specific to the plan and whether or not they allow it as an investment option, right?
Yeah, I don't really know about 401ks. I do believe that there are ones out there. I'm like 97% certain there are.
Okay.
But I don't know which ones there are, and it's up to the plan,
Yeah. We already sort of touched on this, but just to drive it home. So who determines the value of crypto? The exchanges themselves, the miners, they have zero involvement in the price, right? The price is purely just supply and demand of who's buying and selling.
Purely supply and demand. And a lot of it is purely emotional, because there aren't really that many fundamentals that you can measure yet with crypto.
Right. Yeah. So I guess, so top of the hour here, I guess that's the takeaway. So as an investment, my views, for what it's worth, is I clearly don't know enough about it, but I frankly wouldn't be surprised if this crypto thing, and blockchain in particular, really catches on, becomes something of substantive value, and therefore sky's the limit for the price of crypto assets like Bitcoin. And who knows how high they'll get. Or I wouldn't be surprised either if the US steps in at some point and be like, there's too much black market stuff going on, we shut it down. This is outright prohibited in the US, and the price collapses to near zero, or anything in between. So I don't know.
Yeah, I believe that blockchain will likely transform the world in the next decade or two. But cryptocurrencies, we'll see about it.
Yeah.
The jury's very much out on them, and there's so much regulational risk surrounding them.
Yeah.
So blockchain is huge, but cryptocurrencies, another new one that's better could get invented tomorrow that replaces them all. You could ban them tomorrow, and it'd be pretty hard to use them.
Right. So blockchain itself is more of like a sort of concept, if you will. You can't directly invest in blockchain, but you can directly invest in things like Bitcoin, which are cryptocurrency that use blockchain. But like we said, the value of Bitcoin could be infinitely high or could collapse to zero at some point, and nobody knows.
And again, like Bitcoin is a crypto, and Bitcoin is one of those blockchain 1.0 cryptos that is purely just sending data back and forth. When I send you a Bitcoin, really, I'm just sending data in the ledger that says, Zechariah no longer has 10 Bitcoins. Now Andy has 10 Bitcoins. But with blockchain 2.0 and 3.0, that's when you're able to run, it's essentially a decentralized computer that runs across the globe. And that's when you're able to run code on it and when you're able to run apps on it. And that's where the real potential for blockchain is, where blockchain doesn't replace the intermediary. Well, it does. It becomes the intermediary.
Yeah.
So instead of having all these intermediaries where our life is divided into so many pieces, healthcare records, dental records, house deeds, bank, credit cards, everything, the blockchain is the intermediary. Now, that's very conceptual, and that could totally not happen. It also totally could happen.
That scares me, the amount of stuff floating out there, but I guess I can see
I mean,
how it's a
that's like
possibility.
we divide. It scares me how much trust we put into all these different entities that have so much power over us that we don't really think about.
Yeah. Maybe I like that. Maybe I'm just a lemming who wants to keep my head down and not dwell on that, but who knows? I guess one final question. I don't really know what this is asking, but how are crypto used for proof of staking to generate income? Do you know what this means?
So proof of work is that mining protocol where you use super hard, essentially math problems to solve equations, or you solve super hard math problems, and then as a result of that, the transactions are verified and you get a reward. Proof of stake, which I don't know a ton about the inner workings of it, just because that's no longer integral to my job, mostly helping people with like the taxes surrounding it. But proof of stake is, instead of solving super hard math problems and using a ton of electricity in the process to then verify the transactions, get the Bitcoin as a reward or the crypto as a reward, proof of stake is essentially, hey, I'm going to lock up my crypto and kind of put it in a cage, if you will. And then I'm going to run, a little bit of code on my computer that takes a very small amount of electricity. And based on the amount of crypto that I lock up, and this is my understanding of it, it's, depends on the different blockchain. But overall, based on the amount of crypto that I have locked up, then I vote on the legitimacy of transactions. And so it saves a ton of power, and it allows you to simply vote on the legitimacy of transactions instead of solving these super hard math problems. But it does come with the drawback of the possibility of being much more centralized, because if I have a whole ton of crypto and I lock up a whole ton of my crypto, then I have a lot of voting power on the transactions on the blockchain.
So all right, so that's proof of staking. Got it. Okay. Looks like that's it for the comments. So super helpful. Thank you very much for your time.
Yeah.
Just so I'll let you elaborate more, but basically, you do financial planning for folks who are their 20s, maybe 30s. So probably not the ideal fit for the majority of this group, who are typically 50 plus, but to the extent their kids or someone, are looking for like-minded folks of the generation who understand the wants and needs of a 20-year-old and things like crypto.
Yep.
You're the guy, right?
Yeah. So
here's your website here.
Basically, very short story. My parents got divorced when I was young. My dad managed all the money. He did a really good job of it. And I saw my mom, once she got divorced, not only was she trying to protect me and, kind of pick up the pieces from her life, but she was trying to manage her money for the first time. And, I loved her a lot. And I knew that she needed good advice, but she couldn't afford it. And then in college, I got fascinated. Well, before college, I got fascinated with crypto, personal finance, studied it in college. Same thing again, though. People that I loved, I saw them graduating, struggling with their student loans, struggling with their money. And I was working at these wealth management firms, which did excellent work. But I was a little bit frustrated because I saw people, literally me, but in a different profession, call in and they would need help. And so, I work with Gen Z, high earning STEM and health professionals who don't really have any money yet. In fact, many of them have negative net worths. And I help them to manage their income with intention, to save on taxes, to invest wisely, to focus on the small steps today that are going to have a huge impact tomorrow instead of the flashy things. So a lot of the conversations I have are, hey, I know that crypto sounds cool, but let's build your emergency fund. Let's pay off your debt. Let's get you investing in a tax advantage way. And then let's invest in some crypto.
Right. Get the fundamentals ironed out first.
Exactly.
Cool.
Yeah.
And best place to find you, website here, ascentpersonalfinance.com.
Ascentpersonalfinance.com. Follow me on LinkedIn. Follow me on Instagram. LinkedIn, I'm just Zechariah Schaefer. And then Instagram, I'm Ascent Personal Finance.
Awesome. So
Yeah.
thank you very much again. Just stick around when I kill the broadcast. We'll circle up afterward. But all right.
Thank you guys for having me.
Thank you all. Take care now. See you next week.